In this video, I will be discussing bargain purchases. In previous videos, we discussed that when the amount paid to acquire a company is greater than the fair value of net assets, we record goodwill. But what happens if the price paid is less than the fair value of the net assets? Essentially, we are getting a bargain because we received more than we paid for. In the past, F.A.S.B. essentially assumed that we must have measured the fair value of the net assets incorrectly and adjusted values downward until the fair value of the net assets equaled the purchase price. Now we do things a bit differently. Good try, Annabelle. There's no such thing as bad will. Current F.A.S.B. rules say that we should first double check our fair values for the assets and liabilities and make sure we didn't miss anything. F.A.S.B. is still pretty skeptical of a good deal. Assuming the fair values check out, we will remove any previously recorded goodwill up to the amount of the difference between the purchase price and the value of the net assets. If there's still a difference, or if there was no existing goodwill to write off, we will record a gain on business acquisition. This is a one-time gain that appears in the income statement for the year of acquisition. Let's look at an example. So in this example, we have the exact same transaction that we had for the goodwill example a few videos ago, but we've changed a few critical features to make it end up as a bargain purchase. So we still have Preston Company acquiring the assets except for cash and assuming the liabilities of Seville Company. And we still have the same balance sheet of Seville Company. So recall that the book value are the values that would be on Seville's general ledger, while the fair value are the numbers that our valuation specialist would have come up with for the purposes of purchase accounting. We again are going to prepare the journal entry on the books of Preston Company to record the purchase of the assets and the assumption of the liabilities of Seville Company if the amount paid was $990,000 in cash. Okay, so again, we're going to go through and figure out what did we get. So what did we get? We bought the assets, but we didn't buy cash. So we bought the receivables, and so we're going to take their receivables and put them on our books as our receivables. So we need to debit receivables to increase our receivables by the fair value of the receivables, or $228,000. We also bought the inventory. So the inventory is going to become our inventory. So to increase our inventory, we're going to debit inventory for the fair value of $396,000. We also bought the plant and equipment. And we're going to increase our plant and equipment by the fair value of their plant and equipment, which was $540,000. And finally, our last asset we bought was land, and the land had a fair value of $660,000, so we're going to increase our land by $660,000. We also bought the liabilities. So their liabilities are going to become our liabilities. To increase our own liabilities, we're going to credit liabilities. And again, we bring everything over at fair value. Now, keep in mind, we don't bring over the equity. This is an asset acquisition. What we bought is we bought the assets and the liabilities. We didn't buy the equity. The equity is just going to get dissolved because that company is no longer going to exist. Okay, so once we have everything that we bought, again, remember that's our net identifiable assets. So we got all of these assets, and we also had to take the liabilities. So our net identifiable assets are the sum of our assets minus the liabilities. Again, that's the same as it was before, $1.23 million. What we're going to change is that now we only paid $990,000 to get all this stuff. So we again paid with cash, so we're going to decrease our own cash to record that payment. And this time it's going to be $990,000. So we believe the value of the entity as a whole is what we're willing to pay for it, or $990,000. So this time, when we take the difference between our purchase price and the net identifiable assets, we get a negative number. So we actually didn't pay enough. We got a great deal here. And so we can't record goodwill because if you look up here, our journal entry isn't going to balance if we add another asset. What we need is credit. So if we get this far, and instead of the plug we need to balance our entry being a debit, it's a credit, then that means we have a bargain purchase on our hands. And that credit is going to be a gain on business combination. And again, this is just a plug to our entry, but that also ends up being this $240,000 number that we just calculated. This concludes our lecture on bargain purchases. Don't forget to email any questions for our discussion.